This is Scott Becker with the Becker Private Equity and Business Podcast. We come to you regularly with short business episodes, short private equity episodes, interviews with private equity and business leaders, and sometimes relatively irrelevant episodes as well. Today's discussion is private equity, the good, the bad, and the ugly, three key stories. So we're following three key stories in private equity. They tell a story of what we're seeing in the private equity world. First, on the good side, Blackstone is back to investing aggressively. They invested almost $34 billion in the last quarter. That's the most they've put to work in a couple of years. That's a good sign for the private equity industry. Blackstone is the largest of the private equity funds with $1 trillion plus under management. It's in alternative assets. But just seeing some people starting to put money back to work and putting it to work, investing, is a real positive sign. If you're an LP, you've been waiting a long time on distributions. You've also got different capital commitments out there that haven't been called that quickly, and you're waiting on that. So this is a good sign of seeing the slumbering giant back to work and sort of the private equity industry back to work. Second is the bad. The bad is the Texas Teachers Fund, which is the largest pension fund in Texas, has decided to reduce their allocation to private equity. And this is a telling signal. I mean, what's happened with private equity is traditionally, historically, returns are 100 to 200 basis points better than the sort of S&P index fund, the sort of basic market. But for that extra point or two, you give up a good deal of liquidity. What's happened in the last couple of years, those private equity returns, for all practical purposes, have not outperformed the public markets, and there's been a lot of delay in returning of capital and a lot of softness in exiting deals. You've got people that are invented, so it's 5 to 7 years. And let's hope this decision by the Texas Teachers Fund to deploy $10 billion less to private equity is not a canary in the coal mine as to private equity. So that's the bad. The third story we're following today is the New Mexico Attorney General, in line with some other attorney generals, starting to go after, essentially healthcare private equity, saying that there's been patient care that has been hurt by investment by private equity funds in healthcare. We think, again, private equity makes an easy, fun target, but not necessarily the case, just a different capital structure. Obviously, when private equity invests heavily in things, leverages things up very aggressively, and they're low margin businesses, this could be a reason for challenge and problems in healthcare and any place else. But again, the New Mexico Attorney General, like some of their attorney generals, starting to go after and investigate private equity investment in healthcare. So we'll see how that goes. Again, those are the three stories we're following in private equity: the good, the bad, the ugly. Blackstone back to work, putting money to work. Second, Texas Teachers Fund reducing their allocation to private equity. Third, the New Mexico Attorney General going after private equity in healthcare. Thank you for listening to the Becker Private Equity and Business Podcast. Thank you.